This is episode 59 of the SteadyTrade Podcast with your host, Tim Bowen.
Every night he does this watch list. Whether or not he's trading tomorrow or not, he's doing the list. He's doing that work.
And Steven Johnson.
The one thing in life with me is I love trading and I love girls, like so badly.
That's actually two things, Steven. Today in part 9 of this Trader Checklist series, Tim and Steven teach you the importance of building a watch list. Now, it can be a lot of work, and it can get a little boring, but there's a reason why you want to do this stuff. Right, Tim?
Remember, in trading, it's you against the other guys. And no offense, Steven, I'd rather be competing with you versus a billion-dollar super genius hedge fund guy, okay? The competition is a million drunken Jevons running around.
So build a good watch list, show some discipline, and let's jump right into today's episode.
Welcome back to the SteadyTrade Podcast. We are continuing our series covering Trader Checklist. So we've worked kind of through the acronym, the PREPARE acronym. We broke down Sykes' viewpoints, Steven's and my viewpoints, and now we're getting into really the nitty-gritty of application. So we've moved into the chapter where Sykes starts building a watch list, which can be, it can be a little monotonous, can be a little boring, but I will tell you this, that is the type of work that enables you to find the best trades. Most of the trades we're looking for on a day-to-day basis in momentum stock land are stocks that have been moving for multiple days, and this could be long or short. I think about this week. We're recording this episode at the end of August right now, and it's Friday. We're recording on Friday, and 7 out of 8 stocks that I'm trading or looking to trade today were on my watch list Sunday night. So there is value in finding these, keeping an eye on them, and tracking, and looking for key levels. Something like Cron, look that up. The second it'd be the August 20th was Monday. Look at Cron. That was my main stock of the week. It's basically done nothing but go up every day. You could have traded that stock Monday, Tuesday, Wednesday, Thursday, Friday to make money. So there is great value in knowing how to build a watch list.
Yeah, and there's two things I kind of want to add to that. The funny thing about CRON, I don't know how you spotted that, because I saw you call it out in StocksToTrade Pro being like, this could be something. You're like, I'm not sure about it, but this could be something.
It's weed, and weed stocks have been hot, so.
Yeah, but I just didn't see the size of the move it made. I was shocked at, because it didn't just hit its resistance level; it burst through the resistance level, and I'm like, how did you foresee that? How did you can't know for sure, but how do you guess that?
Well, the biggest thing back to building the case was, remember, weed stocks were hot last week, and what has been great, which I love, because many listeners know I'm not a huge fan of OTC stocks, pink sheet stocks. I'll trade them, but I love my NASDAQs. Yeah. And the beauty of this week is the higher priced weed stocks like CGC and TLRY have been moving. They're $40 weed stocks, and they're all up 30-40% the last week, mainly because what you're starting to see, especially in the case of CGC, Canopy Group or something, Constellation Brands, which you might have done work for, Steven. They're a beer and an alcohol company. If you haven't done work for them, you've contributed to their profits at least.
They put
$4 billion into CGC. So that's why I was looking particularly at Cron, because it's in my price range. It's a $7 stock, and it's a NASDAQ-listed weed stock, which I much prefer to the dark, sketchy side of the OTCs.
Yeah, I was just kind of thinking, but I think you've just answered the question. I was like, why not Buds? Why not POTM? Do you know what I mean? But these are all OTC stocks, and you don't like them. The other thing that I wanted to kind of say is...
And keep in mind to the listeners, especially if you're a new trader and you're a small trader, unfortunately, you need to look at these OTC stocks, because they're the ones that are 50 cents and they're $1. So as I go black and yuck, I am not saying these aren't tradable. I'm not saying you shouldn't focus on them. It's just, for me, as a veteran, as a conservative old man, I love my NASDAQs. But
No, but I mean, and it's each to their own, because I mean, if you think of our friend who was on the podcast and part-time pizza delivery man, Papa John, he loves POTN. He loves these little shitty ping sheets, and he nails them. He's posting 2 and 3 grand. I'm like, how are you going long such big positions on these sketchy stocks? But he just sees something that's happening over and over and over, which is cool. But the market for me is a little bit, other than the weed stocks, it's a funny market. Like I've had one green day, one day where I didn't trade at all, and 3 red days, which is pretty crazy. But because when you find the needle in the haystack, when you find the one opportunity and it works, say I made $1,700 on that one trade that I made this week, which was a really good trade for me. Beautiful. It was very niche pattern, and then I lost 600 or 700 trying out other things, cutting losses quicker, and coming out with a $1,000 week. But for me, the funny thing that I've learned is, well, one, I should review my whole trade journal and think I shouldn't have took this, I shouldn't have took that, I shouldn't have took this. But the other thing is, in this month, it's a bit boring, or it can be.
Yeah. Remember we have a lot of seasons in trading, and we've been recording this series of episodes through August. We'll probably go. I'm sure we'll be into September, but just as a newer trader, just an FYI, August is, everybody talks about sell in May and go away. I don't believe that. I mean, May, June, July, we've had some incredible summers the last couple of years, but August is really that month where if there is a slow month, it's always August, because I mean, Steven's from Europe. I mean, everybody in Europe goes on the big vacations in August. In the U.S., it's that back to school rush. Everybody's looking to take their vacations before Labor Day and stuff like that. So it is, if there's one rule of seasonality as a newer trader, if there is a month to avoid, it's definitely August, because the momentum and the volume really come out of the market in August. So.
But a crazy story that I will tell you. I had a bit of a headache one night.
Is this the story you're going to tell about when we were supposed to record the podcast the other day, but you got drunk and didn't show up? Is that the crazy story you're going to tell, or not? Is this
what you're going to do to us? You're not going to say anything, then you're going to put it on the air?
I was just asking.
No. But for the record, I did go to a beach party. There was women involved. It was difficult to leave. And then I did come home from the podcast, but I fell asleep, which is pretty terrible. And
I like how you call it quote unquote fell asleep versus quote unquote passed out.
Yeah, no, but the one thing in life with me is I love trading, and I love girls so badly, and it's so difficult if you around hot girls. It's so difficult because. I speak to other people and they're like, why are you so obsessed with women? And I'm like, it just turns us on. But anyway, I'm sorry. I publicly apologize to the listeners for not causing any disrespect to them, but I'm just disappointed in myself. But anyway, what I wanted to say was, I feel remorseful, like I could cry. It's because of me. Life's out of control. You guys don't know me. Life's out of control. I'm the least likely person who should be trading.
Actually, what we need to do is we should start a SteadyTrade GoFundMe to pay to relocate Steven to my basement, and then I can beat it out of you. I mean, we could probably start that. So,
I mean, I'm happy if other people are willing to pay for flights because they recognize that I've got a problem and I'm out of control. Then I need help. It's not that my parents have failed us; they were just a bit too easy on us. Do you know what I mean? They were just a bit too easy. My dad was at work. My mom loved me a bit too much. It's like, oh, go on, Steven, you can have that ice cream. Go on, Steven, you can have that toy that you've always wanted. Next thing I know, I'm bloody sleeping in for our podcast. And I'm like, Mom, where are you now?
I'm willing to bet, and this is obviously a SteadyTrade reference. When you passed out on the couch, were you wearing flip-flops by any chance from that beach party?
I was not because I bought a pair of Nike flip-flops, and they always give us these blisters. And you'd think that they would wear in. You think, it's just a little bit, it's just a bit of wear and tear. Never wore in, so I threw them out, and I've never bought flip-flops again.
Your feet are just as soft as your discipline.
Yes, but I think my discipline's definitely got better, which links directly as a segue into this story. So I had a bit of a headache the other day, right? And my mum gave us these tablets called Imigran tablets. Have you heard of Imigran? Is it called Imigran over where you are? Anyway, wonderful tablets. They make you feel very light. And they help you to pass out if you've got a particularly strong migraine.
Actually, I know what you're talking. In the U.S., we call that meth.
It's not meth. I've never done methadone before. I've never done it. Crystal meth, methadone. Never done it before. It's never appealed to us because it's one of those things where I think if you take crystal
All
meth,
right, tell your story. We got to get to these watch lists.
It's a bit of a dirty drug, and I've already got enough problems without being addicted to crystal meth. Although I would lose a little bit of weight. But so I took this Imigran tablet, and I passed out, and I had these very, very lucid dreams. I know some people get lucid dreams off Alpha Brain. You take Alpha Brain, right? They give you very lucid dreams. So this Imigran tablet gives a very lucid dream. And I had this trading epiphany that I was sitting at my desk. I was in a trade. And instead of what I did instead of what I would normally do is I thought, I'm only going to take a stock that I know has got 10% downside on a short. I'm only going to take it if I think it's got at least 10%. And if it doesn't have 10%, I'm not going to take it because it's going to waste me time. So I'd wait where I think this has enough indicators to drop 10%. And then I'd think, I'll tell you what I'm going to do. I'm going to short it when I think it's near the top. And if it's not near the top, I'll cut it and I'll short higher. But what I'm going to do is I'm going to have a quarter size. And then when it drops, I'm going to have another quarter size. And I'm going to keep on building in with conviction to say, I'm not getting out of this trade until it hits my price mark. I'm not getting out. And I'm going to average into the winner and lower the risk. And if do you know what it is? If I end up break even through lowering my risk and averaging down into the winner, then I was wrong on my trade plan, so I'll get out break even. But if I'm right on my trade plan, I'm taking full profits. And do you know what it is? Bloody hell, made $1,700 and I wasn't risking more than 100. And I was just like, do you know what it is? I get it. Well, that was a mix of I dreamt that I was doing something like that, and then I applied the dream. So I dreamt the strategy. And then I was like, I'm putting this into action. I think it was a mix of Imigran, you, and the Forex guy who we interviewed a while ago. The three things come together like baby Jesus and the Trinity. It was just like the Holy Ghost, Jesus, and the other one, whatever it was. All three of them come together.
Hey, I got an idea. How about we play the first clip?
Yeah, I'm sorry.
All right. It is now 9:30 p.m. Eastern, which means that the stock market has been closed for a few hours. We are roughly 12 hours away from the stock market reopening. So I wanted to take you through my process of building a watch list and seeing what I expect with these stocks. Because, again, I know it's a surprise, but I don't just look at these stocks as potential buys or potential shorts. It's all about key support, key resistance levels, odds, risk, and all the indicators we've been talking about. So here is the watch list, literally, that I send to subscribers of my newsletters every single night. I have a nice little summary here of just some of the basic rules. Today was a $45,000 profit day. I just add up basically what people tell me in the chat room and on various social networks what they've made. I made around 700 this morning, as you saw. My accounts now, I started the year with 12,000 and I'm at roughly 77,000 after 7 months now. Don't be impressed or not impressed with the number. I trade in order to teach.
So there's a couple points I want to focus on here that is, I think, applicable for the new trader. Something that Sykes is doing there is every night he does this watch list. Whether or not he's trading tomorrow or not, he's doing the list. He's doing that work. And I think what he does, which is a great value, if you sign up for his newsletter, you get to see his thoughts. But I say you should replicate that as well. Write those notes out. Write your thoughts out, because a lot of you might not be able to trade every day. And if you can then write that out, and then at the end of the day, the next day, see what happened and see if your plan played out the way you thought it would.
Yeah, and the only other thing that I would probably add to that is especially something that I picked up from you, Tim, and I don't know if it was from a podcast or in the StocksToTrade Pro sessions, I can't remember, but it's good to write your thoughts down beforehand, take screenshots of the chart so you can see what the chart looked like before it developed, because it's very easy to look in hindsight at a complete chart, and then take a screenshot of the chart at the end of the day, and I would review what you thought and then what happened and how you can refine the entry and exit points. But also review it at the end of the week as well. So psychologically, have you had good discipline? Have you had bad discipline? And what goals will you set yourself for the next week ahead as well? This all, for me, comes under kind of a daily watch list and just an overall weekly trading journal.
Yeah, I think, I've talked about this, and that might be the story you're thinking about. I used to have, back when I got started, I had 3-ring binders. I'm an old guy. I like paper, but I would print those screenshots all the time, and then I'd put them in that binder, and then I would review them at the end of the day. That way I could have kind of that screenshot of the day before. I would write on them, and again, I know all you kids out there are probably like paper and pen, but I would write on them. I'd draw key support and resistance levels. I'd be like, okay, if this stock breaks this level, I would short there. I would stop here if it reclaims. Then, go about your business, go to school, go to work, whatever, and then review at the end of the day and see, okay, what did this stock do? Was that a good trade or not?
Yeah, and the other thing is as well is especially when you're just starting out, it's good to write the plan down as part of a watch list, because it's good to have the process in your head. And if you write it down, there's more chance that you're probably going to execute it, or you're probably going to stick to it if it's written down. Because the trades for me that have gone way out of hand are when I haven't wrote down a plan, the plan hasn't been in my head for an hour, I've reacted to something on a whim, and then it's got out of control and I've let it slide. So especially in the early days, write everything down. Write everything down before you do it. It's some of the best advice I've ever been given, and I didn't take it, and then I took losses because of it.
So do that work. That's the key takeaway from this clip. Write down your thoughts, print those charts, save the screenshots, whatever. Review. Next clip.
Nelly did the same review.
And I saw an article tonight, Business Insider said this is like one of the most boring stock markets ever. And I'm just like, oh my God, you guys are looking at the wrong stuff, because right now the market is on fire, or at least my market niche is on fire.
And yeah, I mean, generally it's said that 4 out of 5 stocks do follow the market, but for micro cap stocks and penny stocks, when a market heats up or a sector heats up, it can go crazy. When low floats heat up, it can go crazy. When wheat stocks heat up, it can go crazy. There's also lulls, and not every kind of stock hits your pattern. So sometimes the market might be quite volatile, but your pattern might not be coming up. So you've got to kind of sit on the sidelines and think, all these people are making money. It's not my time to make money. I can accept that. But yeah, I mean, it's quite up and down penny stocks, I find. You do have lulls, but you have a lot of madness.
Yeah, that's the thing, especially. That is one of the beauties of low-price stocks. I mean, if you're a long-time listener of SteadyTrade, I mean, you've heard my bio probably several times where I tried trading those real stocks for years, and just, again, if I made like single-digit percentages for the year, it was a good year. So the takeaway from this is, most of the time, ignore the mainstream, because they're looking at these billion-dollar market cap stocks, and I mean, 90% of the year, there's action in the low-price stocks land. That's why we love it. I mean, we just talked in the intro about August being slower, but there's still, I mean, yeah, we went from, spring 2018 having 10, multi-100% runners a day to now we haven't had that, but we're still getting 40, 50% runners. There's still activity. That is the beauty of low-price stocks. So the takeaway, in my opinion, from this is, just like Sykes said, ignore the mainstream media. There's always opportunity out there in low-price stocks.
Yeah, and you've just reminded us, actually, I was listening to a podcast just earlier this afternoon, because I've been checking out the competition. And there was someone really hating on penny stocks. And he was like, people new to the market shouldn't be trading penny stocks. You can't make money in penny stocks when you're new. They're like, no one should be teaching this. It's too difficult. You should be learning the higher price stocks. And I'm like, that's crazy. That's crazy. With penny stocks, they're simpler. There's less variables. There's less complexity. There is less competition from higher traders.
remember, in trading, it's you against. Well, it's you against the market, but in theory, it's you against the other guy. And no offense, Steven, I'd rather be competing with you versus a $1 billion super genius hedge fund guy, okay? And the $1 billion super genius hedge fund guys do not touch low price stocks. That's the beauty of it. You've got the competition is a million drunken Jevons running around. So
no, it's like, do I want to be against some 55-year-old bloke who works 90 hours a week, keeping on top of every single.
He's got an entire team of interns. Analysis. He's got supercomputers in the basement. Yeah, yep.
Or do you want some 19-year-old kid from Canada who loves getting drunk on the weekends and is just giving penny stocks a shot? Do you know what I mean? I'll choose the 19-year-old drunk Canadian kid. Nothing against Canadians. I love Canadians, but they've got a tendency to drink the alcohol. Anyway, next clip.
So I just wanted to get that out of the way. But here, I just started writing this watch list on this spreadsheet that we went over earlier today. I wrote down some of these stocks that I'm watching, and I've grouped them together as I usually do. I don't look at each stock as an individual type of company. I look at it as a potential play, as a pattern. And patterns are very similar. So GBR, EVOK, DELT, and EBIO are my 4 most likely buys. I'm actually long DELT overnight, which I'll explain in a second. SPHS, MDGS, FATE, BLDP, XCOM, and CDTI. These are spikers and recent spikers, but none of them have perfect price action or the right catalysts. GRPN, PEIX, and ALIM. These are 3 earnings winners, and I'm always looking at recent earnings winners, although as all 3 of them have proven, they're uptrending, but they're choppy, and they're really not that exciting. And then we have SPU, OPTT, KONE, TOPS, which are the 4 low float plays that I've been running, and I actually did very well on SPU. This was my play today.
So Sykes is doing something here that I do and have done for years and years and years, and he's breaking these stocks down and categorizing them. So keep in mind, remember, we're just touching on bits and pieces of Trader Checklist. Remember, the Trader Checklist, the entire thing is free. You can Google Trader Checklist. It's on YouTube. It's on TraderChecklist.com. Sykes does all of that work where he runs these through the Sykes sliding scale, and then that allows him to then categorize them. So I highly recommend you watch that. Check it out. It's there. We're not going to replay the whole thing here. But then the best thing I like about this, and I think it's a very valid point, is the low price stocks run in packs, okay? They could run in packs because they're earnings winner, as he mentions. They could run in packs like weed stocks, like we talked about in the introduction. They could run just simply, we talk about this a lot on the podcast, low float stocks are a sector. I mean, you could have a low float marijuana company, a low float automotive company, a low float software company, all different industries, but low floaters tend to run together. So I highly recommend you do the same thing. StocksToTrade has unlimited watch lists. Pretty much any platform, whatever you're trading with, is going to allow you to create multiple watch lists. And I would do the same thing Sykes does here. You group them together based on what sector, based on what the setup is, if they're potential shorts, potential longs, swing trades, etc. Because, especially for me, I trade different stuff depending on the time of the day. So I will have my low float momentum watch list that are my main watches at the open, because these are the stocks that typically rip at the open. They're good for long and shorts. Then as I move through the day, I'll start flipping over to my swing trade watch list, and those are the stocks that I want to trade over multiple days if they're strong in the afternoon. So great tip here. Don't have a watch list that's 100 stocks long. Categorize them and break them down so that you can manage them and see what is moving based on the category.
Yeah, and just to touch up and add on to that, another good idea is to have a former runner's watch list. Because if you've got a stock that has a history of running big, and then you log in and you see it's up 5-10% pre-market, and it's traded anywhere between 500,000 and a million, if it's got a positive catalyst, there's a good chance that that's going to run again. So you just want to make sure you've kind of got that on a separate list as well. But the way that I've always kind of managed my watch lists more recently, being way more short biased, as I'll keep a list of what's up on day one, more than 10-15%, and then the next day I'll look back at everything on day one and look at what moved another 10% again, and then I'm constantly looking at day 3 and day 4 thinking what is up like 40, 50, 60% over 3 days and 4 days, to think what would make a good short, what's really overextended now. Because like Michael Good said, you can bet your bottom dollar if it's up 3 days, it's probably going to come down on the fourth. Just generally happens.
This is what I call the rolling watch list methodology.
I thought you were going to say the rolling wolf list.
No, not
rolling wolf list.
But I talk about this all the time in StocksToTrade Pro. I've for years I've had that Monday, Tuesday, Wednesday, Thursday, Friday watch list, and this actually goes back to when I was more short biased, because I did exactly what you did. I wanted to see which stocks, say it's Wednesday. Okay, what's the big runner from Monday doing now? So I would flip back, and if that big runner on Monday kind of closed sideways on Monday, then Tuesday started tailing off. Now come Wednesday, I'm like, hey, if this thing doesn't spike or get some news, I'll look to hammer it. So yeah, I mean, that rolling watch list I've done for years.
And just a random thing that came into my head, because we discussed it on Stocks-to-Trade Pro this morning in the morning session. Don't hold shorts over the weekend, especially if you're red on them, under any circumstances. It's random. It's not part of the guide, I just want to say it.
It's amazing. There are few rules you can write in stone, but if you are upside down on a short going into the weekend, it never works. Never. No. It always gets worse. Always.
and you know the they that everyone talks about in terms of the unknown people, the people that can kind of control the market, we call them the they. They know that traders are upside down, and they prop the stock up on Monday, and they will push and squeeze you, and it can be a disaster. It's almost, if you're going to do anything, it's almost worth going long, anticipating that it's going to squeeze on Monday.
And just keep in mind what we said. I mean, well, first of all, I'm very anti-holding any short over the weekend because of, we call it Money Monday. There's always a lot of news, but keep in mind the caveat we're talking about is if you're upside down on a short going into the weekend, please just cover. Please. You will be so much happier come Monday, trust me.
Yeah, and you won't have the anxiety over the weekend as well. But the one thing last thing I'll say, the one thing that gives me a slither of hope that I will one day be a successful trader is the fact that some lessons have been deeply, deeply ingrained in me through horrendous burns. Like the big loss holding out in it must be more than in the last 6 months, I have never held a short overnight. I've never held a short over the weekend because the burns are catastrophic. The pain that you feel is catastrophic. And it's just like, the thought makes me shudder. I just can't do it. And I mean, you must be the same. You must shudder at the thought of doing something so catastrophic. There was a worse word, but I can't think of it.
Well, I've done it more times than I care to admit. And if I held a red short over the weekend 100 times in my career, I've been burned 99. Maybe I might have been burned 100.
But and the other two things is chasing a breakout and shorting a midday parabolic. Those two things as well, I just don't do. It's been knocked out of me. It's like having a fight with a bigger guy. You get knocked out and you think, I'm not going to do that again. Not that I've done it, but just had to get it out there because I'm worried about new traders. Like, I'm worried about it. So, next clip, but I just had to say that.
Let's get to the watch list for a second. GBR, EVOK, DELT, and EBIO are the 4 biggest percent gainers in the market. I highly doubt DELT will go full-on supernova tomorrow to the What is DELT at? It's in the twos.
Now, there was an American gentleman, a wizard of a man, once gave some very compelling advice that has stuck in my mind for the entire time I've traded. And he was once saying, make sure you write all your thoughts down and write the tickers down, and maybe use a platform called Evernote. Because when you do that, you can not only look back on your thoughts, but you can also command search, and look back in time and in history and see what the stock's done in the past, what you were thinking in the past, how that played out, and how it's played out in the future. Do you concur, Tim? Or?
Yes, I do. And actually, yeah, there's a lot of applications out there. Evernote, I think, is one of the best because it's free. And what Sykes is showing here, and this is what we talk about, this is that grinding that you'll hear me talk about over and over and over again, whether it be in StocksToTrade Pro or on the podcast. I mean, this is how the sausage gets made, looking at these charts. I mean, Steven's heard me say it. You got to look at charts till your eyes bleed. You got to look at these filings. You got to look at the news, and you got to write this stuff down. I mean, this is Tom Brady watching film on a Thursday. This isn't, this clip was not action. This was not making $10,000 in 5 minutes. It's not Sunday afternoon for Tom Brady, but this is what you got to do on Thursday evening to get to Sunday afternoon, to get to Super Bowl Sunday. You don't see all that when you see some guy on Twitter post some amazing profit and loss. I made 10 grand in 5 minutes. You don't get that without putting in the work in the film room and the weight room and everything else.
Yeah,
just like Steven, just like when Steven trains, he trains once a month. He puts in that work for like 15 minutes on the treadmill at like a mile and a half mile per hour. And sometimes he even puts that treadmill on like a 1.5% incline when he gets crazy.
I don't think you're much of a runner though, right? We've had some competitions over the years, and I'll give you that you've destroyed me when it comes to rowing. Destroyed. But do you run? You don't run, do you?
I do run a little bit, mostly sprints, because distance, I am an old man. My joints are a little beat up. Distance running's a little hard on me. I do a lot of sprints because, again, if the tiger is there, if the zombie is there, I know you'll be in flip-flops. So all I got to do is outrun you for 40 yards. The zombie or the tiger gets you, I'm home free. So.
Rawr. There is a tiger inside of me. I must say that. And
do you have tiger? Do you have hashtag tiger blood?
Don't have tiger blood. I don't have the same blood as that guy. Who's that American guy? But on the sometimes to get rid of your demons and to really push yourself to feel good, like I can push a good 5K out in 24 minutes, 5K in 23.5 minutes.
How long is that in miles?
Oh no!
I don't care about your kilometers.
Bloody Americans! Bloody Americans! What am I going to do with you? It's probably about 4 miles, 3.84 miles in 24 minutes. I would like to see you beat that. I don't think you could beat it. So I'm a pretty good runner.
Let me write this down. A 5K. I got to do a 5K in
24 minutes. I don't think you can. If you do that, you can hit me on this stage at the conference on the head with a bag full of coins to knock me senseless.
Again, I don't do much distance running. So do I get a time? I mean, do I have to do this today, or can I have like a month, or what?
Well, you're never going to do it, so you can have as long as you want. Just make it an ongoing thing. Now, you can have you've got till the end of the year, and
I don't need that long.
Okay, well,
to beat you, 4 months to beat you. I don't need that kind of time.
I am surprisingly a good runner. I used to run 400 meters. Meters works for you, right?
So by the conference, I got to run a 5K in 24 minutes.
Yeah, and if
the
you
conference
do,
is October.
I'll just beat you. Because there's absolutely no way I will lose to you on this. It's like me secret skill.
So anyway, put in the time, write your notes, use Evernote, use a notebook, use something, but do that work. Next clip.
SPHS, MDGS. It's like just the gaggle. FATE.
I like the use of gaggle.
XCOM and CDTI. XCOM and CDTI. are all recent spikers, but none of them have perfect patterns or catalysts that I like. So while I'm watching them, I'm in no rush whatsoever to trade them. They need better news, better volume, better patterns before they get my hard-earned money. Let me explain what I mean. Here is SPHS. This one was going up, but then you have kind of like this kiss of death, and it's been just treading water ever since. This is not, when you get a big drop like this and it can't really bounce, that's not a good sign for buyers. That said, I'd be scared to short it because it's gone up so much, and shorting in this market is very, very scary. Shorting anything, and this still has an uptrend. I don't know what to do. It's mid-range, and that's it. MDGS, same kind of thing. MDGS was that big spiker. I tried to buy it at 2 right here, and it spiked too quickly. I missed it. I didn't want to chase it. Well, guess what? It was holding just above 2, but today, pre-market, it couldn't hold its gains, and it finished just under 2, and it looks like 2 is being used as resistance now. So there's absolutely nothing that I want to do with this as long as it's under resistance, and, it now has resistance at 2 and resistance here at 210 and resistance here at 230. It's going to take news, volume, and I don't really ever want to buy a stock that's down 11%. That's going in the wrong direction. I know some of you guys think, let's dip buy it. This is a good time. Again, I like big percent gainers. I don't like losers because they're frankly just not predictable, not as predictable. And I don't want to short it because, you could get another one of these spikes where it spikes $1 a share in 10 minutes. So the risk reward on shorting it is terrible.
So the valuable lesson from this clip, and the reason we selected this one to focus on from Trader Checklist, and remember, you can see the whole thing for free. Trader Checklist is entirely for free on YouTube and at traderchecklist.com. But the biggest thing that I liked about this clip was Sykes is showing you what stocks to not trade, how to get something off your list. This is something that I go through every day. I mean, whether I'm trading on my own or in StocksToTrade Pro, remember, there is nothing I love more than kicking a stock off my watch list. I love it. I love, gone. It almost makes me happier. The only thing that makes me happier is when I can click close on a Skype session with Steven. That makes me happier, but kicking a stock off my watch list is close because there's so many momentum stocks, there's so many movers out there, you can't trade them all. I use this saying all the time on the podcast. He who chases many rabbits catches none. You can't follow, as a new trader or even an intermediate trader, you can't sit here and follow 15 stocks, 20 stocks. You certainly can't trade them. I mean, as a newer trader, 1, maybe 2 positions are the most you should have. So there is work in breaking these down and kicking them off the list. And that's why I have these worksheets. If you're following along on YouTube, you can see a couple of them here. So I've got all these criteria, and basically that's what Sykes is doing. It doesn't meet this, it doesn't meet this, it doesn't meet this. You're gone. You're off my watch list. Let's move on.
So what's the phrase? He who chases bunny rabbits?
He who chases many rabbits catches none. And it's just like in football. Okay, so if you're playing football and you're trying to block 2 guys, you'll block neither of them. You have to, even if you decide as a lineman, I was a fullback. I mean, if you're running that end around, you need to pick a guy to block. If you try and block 2 guys, you're not going to get either of them, and your running back's going to get tackled. So you got to focus on one. If you try and chase a bunch of rabbits, you'll get none.
I never really thought of you as a football player. You mean NFL, like an NFL player, right?
Well,
like
I was certainly not in the NFL. I did not play collegiate high school football. Yes,
high school, that sport. Yeah. I could just not imagine you.
You know,
what
real
did you do?
football, like, you know, the NFL, not that whatever.
Yeah.
With you guys running around chasing a ball for 3.5 hours.
I thought it would have been too risky for you. Wait, was there no risk in that?
Yeah, a lot of risk, but again, when you're a teenage male, I mean, you like to run into stuff.
Full of testosterone, full of testosterone.
You like to run into stuff when you're that age. So.
I like it. I like the camaraderie. I was a rugby league player. If you've heard of rugby league, yeah, I was playing rugby league. I was second row. Because I was a big lad. But a couple of things that I'm burning to say, and I knew that I would almost forget them if we talk too long about stuff. Shit. I am the worst podcast person ever. But one of the things is what you said.
You're not the worst, but I would.
Nearly.
You are one. You are one of the worst. You know, I'm not saying you're the worst.
There's some bad podcasters. I've listened to some podcasters, and I'm like, you guys are trying to be funny, and it's not legit funny. It's not serious funny. It's not natural. But anyway, what I would say is not the bunny rabbit, chase the bunny rabbit thing and catch them all or don't catch them all. I wouldn't say that, but I'd say something similar, and I'd say a jack of all trades is the master of none. And I think especially when you're new, you need to master one setup. So if you've got 10 stocks and you're watching them all, you're going to just mess something up because you need to have a proper plan. You need to be familiar with the plan. You need to have seen it happen before. And the only way to do that is just to follow one or two setups religiously to the point where you think, right, he has me set up. This isn't me set up. He has me set up. This isn't me set up. And the other thing that I would say, and like just for me, like if I trade me one setup all the time, I make money regularly. When I do random other stuff, I lose. And there's a counterintuitive argument where you could say, but you have to trade other stuff to learn. But there's some stuff that you just don't get. Like there's some, like dip buying, some people will just not get. Breakout, some people might just not get. Shorten, some people might just not get. So you've got to find your niche and just try and stick to it until you really master it. The other thing I would say is an idea for StocksToTrade. It might be a nice idea because you know how when you've got a list of 10 stocks, maybe you want to kick it off the watch list that day because it didn't do exactly what you want, but you don't want to kick it off the watch list permanently. So I wonder, is there a way of just crossing a red line through one of the stocks just to say I don't want to look at that for the rest of the day?
Well, I guess we could certainly consider that. The way I do it is again back to like what we talked about with Evernote, because I'll look back.
Yeah.
You know, especially if it's later in the week, and especially if maybe I'm struggling to build a watch list because maybe it's a little slow out there, that's when I start flipping back through those previous days. And you might be like, oh, hey, here's this stock that I was talking about on Mondays. This is back at 52s. Maybe I want to put this back on my watch list. So, and what I do a lot is set alerts too. So like if there's a stock, it's a slower moving stock, and say I want to buy it when it hits a 52-week high, I'll set that alert at 52-week high. Then I can kind of just forget about it because if it fades or goes sideways, I don't get the alert.
Yeah, and do you know what pattern we saw today? And I put it straight out on Twitter, and I was like, ha ha ha. Do you know was it TRXE today?
Was it the high-priced weed stock? TLRY.
CGC. Is it? Yeah, TLRI. I'm so bad with tickers. It's unbelievable. TLRY, it was the pattern. Do you know the pattern that we've been talking about in the podcast and the podcast and the podcast? Popped up, spiked, came back down, kind of double bottomed, and then it was just about to hit new high of days. And I was on Twitter, and I was like, we've been talking about this on the SteadyTrade Podcast. I'm long. This is the best. And then bloody Citron put a tweet out saying he's dropped his position in it, and he bloody ruined all the longs.
Yeah.
He turned it all upside down. I was like, no, I've just tweeted about this.
Well, which, and that happens in trading, that's why you have a plan and that's why you have a stop loss, because you're right. TLRY was beautiful today. It's running. A hot sector. It's marijuana, but you can't control when somebody like Citron Research, who has a huge following, who is known for moving stocks, when he drops that hammer, that's why you got to react. You can't predict that. So
But you know what you shouldn't also do? You shouldn't flip-flop too much. You shouldn't wear flip-flops, and you shouldn't flip-flop in trading, because the first thing I did is thought,
that could be a new Steady Trade shirt right there.
Don't wear flip-flops, and definitely don't flip-flop in your trading. We need to make these T-shirts. It's on the list of agenda things. But the one thing that I did today is I thought, you know what it is? The last time Citron did something like this, the stock dropped from 9 to 4 with CVSI. Mm-hmm. And I'm like, I'm flip-flopping. Yeah, I was long. It's dropped. I'm flip-flopping. I'm going short. Of course, went too heavy with too much size too early, with too much instinctively. Then it was popping up. And when it made a little dip, I just got out for a small loss, because I was just like, you went too big, too much size too soon. And then, of course, it's dropped since. But I lost $100 because I flip-flopped. Don't flip-flop. Don't wear flip-flops. Don't flip-flop. Right?
I agree.
Do you flip-flop? Do you flip-flop?
You know, again, obviously, I talk about this all the time. Trading is about mistakes. I try not to. One of the reasons I make all these notes, these trade plans, is I try to kind of stick with what I was thinking. But hey, I'll admit, something, especially when something like that happens, when you've got this change, whether it be a piece of news or whether it be somebody with a big following tweeting about it. I've done it. You know, I try not to, though. I try to go into the day saying, okay, this is my plan on this stock. You know, if I'm looking to buy this price level and it spikes that price level and fails, I try and avoid saying, okay, now this is a short, or vice versa. But hey, you know, the biggest thing with trading is minimizing your mistakes, because you're going to make a mistake today. You're going to make one tomorrow. You know, you're going to make one next week, next year, but minimize those mistakes.
Yeah, and just the last thing I'll say as well is it's so good to try and stroke the ego and be like, oh, you just saw this thing in 2 seconds and you took this decision and you killed it. But on the flip side, I remember what Duck said at the last conference. He said, if you have conflicting indicators, don't trade it. And I think this was a good example, because you've got the wheat sector that's hot, you've got the stock that's on 52-week highs, you've got big volume.
And it's almost back to day highs right now. You know, we're getting into 1 p.m. and it's pretty much recovered that entire move from that Citron tweet. So,
right, but you've got a number of bullish indicators: hot sector, lots of volume, multi-year highs. But then you've got a lot of bearish indicators where you've got like Citron's just done a hit piece. The last hit piece he did, or the last tweet he did, the stock went from 9 to 4. That's a big crack in the intraday chart. So for me, it's like, there's real conflicting indicators there, so just don't take it either way. Don't guess it.
So the lessons from this episode of Trader Checklist, the two biggest takeaways are, first of all, watch Trader Checklist. Follow along with us. If you're wondering about some of the stuff we talk about on screen and you're listening on iTunes, remember you can go to SteadyTrade.com. You can go to YouTube and watch. Go to Trader Checklist. Check it out, TraderChecklist.com. Or just search for Trader Checklist on YouTube. And always remember, don't wear flip-flops and don't flip-flop your trade plan.
And don't chase all of the rabbits.
Hi, this is Aaron, a.k.a. Double A Ron from New York City. And I like to go outside and find a stray dog, preferably an aggressive breed like a pit bull or a Rottweiler. Then I get real close, stare it down eye to eye, until it starts to chase me. Then I run. That's right, I run, while listening to Steven and Tim on the SteadyTrade Podcast. You can register to win real, actual prizes at their website, SteadyTrade.com. And if you really like what you hear, give the podcast a 5-star rating and write a glowing review on iTunes. I did. And this is how we say goodbye in New York City.